Hi, I'm Keith Mady with Landmark Title. The real estate market is constantly changing, and it's important for you to stay on top of this information. With Marketing Insights, we provide you facts, figures, and statistics to stay on top of the market. Come join us now.
Good morning, ladies and gentlemen. Scott Kiburz here with Market Insights for Landmark Title, October of 2023. Sarah, let's get started right away. Our agenda today is really to look at some national headlines, local headlines, some numbers in Maricopa County, and then, of course, at the end, we have about 18 to 20 individual city numbers for everybody to enjoy and dive deeper into. Next, please. So just from a national standpoint, what we're showing here is the National Association of Realtors is still working on the class action lawsuits. So between today and this time next month, one of the key class action lawsuits is scheduled to go to trial. What's happened here in the front of this is two major brokerages have already submitted payment and in hopes of being removed from the lawsuits and being out of anything happening in the future. One of those is Anywhere, and the second one, I believe, is Remax. I apologize. One sent in a check for about $85 million, and the second sent in a check for about $55 million. There's still a couple other key brokerages, including KW, that could settle before the lawsuit, maybe not. And then, of course, it's going to go against NAR and some of the local MLSs. That's happening, ladies and gentlemen. Regardless of the outcome, our industry is changing because of these class action lawsuits. So I just want to make sure everybody's aware of that and that our head is not in the sand trying to avoid that. It is going to have an impact on our business. Next, Sarah. Just a quick heads up, ladies and gentlemen. Google broke ground in Mesa for a significant data warehouse. First time they built anything like this in Arizona, and the project is going to be very significant and ultimately be over $1 billion investment. And this is going into the city of Mesa. Mesa, Arizona right now is certainly in the top 20, if not the top 15 growing cities nationally. There's a lot of good things happening in Mesa, Arizona today. Next. Heads up on the Taiwanese semiconductor plant in North Phoenix, that due to a labor shortage of skilled labor, they are delayed in opening, and it looks like it's going to be 2025. But please know that they're racing ahead to continue to get that built in and moving forward. Next. Heads up on the Arizona airport, the Phoenix Sky Harbor Airport. I was just impressed with the fact that 120,000 people fly through that airport every day. There's almost 60,000 jobs, and it generates a lot of income for our metro and our state on a daily basis. Next. Some advanced growth in the Phoenix Mesa Gateway Airport, and I love this aerial view to see the runway and what's there currently. And I'm keenly aware of the Sky Bridge and Mesa Gateway Airport with Gulfstream jets happening, and then the Gateway East section to the right in the various colors. There's just huge growth coming to that corridor. And look for good things to continue. And if you're a fan of Eastmark in the Southeast Valley, there's just a constant good ripple effect happening there. Next, please. It was March of last year that interest rates first started to rise to combat inflation. Please know this is a great document in the fact that they have risen faster than they have in a 23-year history. There's between 12 and 14 interest rates adjustments that have happened. There is commonly known now as the magic interest rate, that when we do get through inflation and our country, our politics, all those things kind of tamp down, settle down, the magic interest rate that people are talking about is 5.5%. And right now, of course, we're north of 7 for most people. and that there's still a lot of cash buyers as a percent that are out there. Somewhere between 25 to 40% of all transactions are cash and or hard money loans, not so hard money loans. Next, please. Affordable housing in the Sun Belt. So what they're saying here, this is coming from Real Estate News, and that they're still talking about Las Vegas and Sacramento as places that people are migrating to. This is some report from Redfin via Real Estate News, and we're still a very desirable place to be. I'm currently at a conference here in New Orleans, and they talk about Hurricane Katrina like it happened the other day, even though it's been 18 years ago. There's this little bit of energy, like what if it could happen again? In our metro of Phoenix, again, we've had a little bit of a water issue that we're spending over $1 billion to hopefully remedy, but we're not dealing with hurricanes, tropical storms, and earthquakes like other parts of the country are. So we're still a very favorable place to live and create wealth and have a family. Next. So again, I apologize, ladies and gentlemen, but I just love this slide on John Burns and the 4 influences on our market. So when people are looking at, hey, we're not having a lot of movement in transactions, the baby boomers who should be downsizing and selling their big house and moving down are not doing that. People are too scared to surrender their sub 4% interest loan on their current home to go to another home, whether they need something bigger or smaller, because they don't want to surrender their interest rate. We have a lot of things still happening with the economy and interest rates. We have technology that's alive and well. From a technology standpoint, ladies and gentlemen, it was announced yesterday that Homes.com, owned by CoStar, has moved into the number 2 spot in terms of a search engine, taking over Realtor.com. Our government, boy, we were just right there at a government shutdown. We missed that. It's going to be a conversation another 45 days. And our societal shifts, that we still are an attractive community. We have great workforce, great infrastructure compared to a lot of other national cities. If you were to say anything about Arizona and investment, we're no longer a low-cost alternative to a big economy like California. Our prices overall have gone up. It seems like the Carolinas right now, especially North Carolina, seems to be a very sought after part of the country where housing is more affordable and the opportunity for job growth is alive and well. Sarah, next, please. And then again, just what mode are our buyers and sellers in? Overall, I would describe that as even keel. If you have somebody's, ladies and gentlemen, as a buyer or a seller, they are motivated. And I can just tell you, it's being highly relational, in conversation, doing deep discovery, and creating a very strategic plan for that individual buyer and or seller to determine success. It's not one size fits all. Being very strategic and relational has never been more important in our local business market. Next, please. Here we go with some numbers. So our total actives have gone up in all the MLS from just over 12 to just over 13,000. As we slide down to line 3, total single family, 7464. That again is up about 800 doors. Condos and townhomes have surged over 600 into 682 and 675. When we look at total solds, we're down a little bit there. That's the third from the bottom line at 5509, down from 6467 the previous month. And total solds in Maricopa County with 4292, and total single family really is the lowest it's been in quite a long time at 3371. Don't look for a lot of change there, because if you slide up to the pending, our pendings are down a couple hundred doors from where they were this time last month, and our UBCs are down another 150 doors, almost 200 doors from where they were last month. So we're not going to have a big surge just looking at under contract and pending at the end of September as we move into October. But we are going into one of the second busiest seasons of the year. So if there is a surge between now and November, look for that hard. Again, if you have a client who reaches out somehow and expresses interest in buying and selling, that is the motivated. Create a business strategy to help them move in and or move out of a specific home. Next, Sarah. Again, when we hit the lowest amount of inventory about 2 years ago, we had 4,000 active listings in our 153 zip codes of Maricopa County and or a net of 26 doors per zip code. As of the 1st of October, we were at 9216, which works out to an average of just under 60 doors per zip code. So our inventory is up more than double than what it was at our lowest point. So buyers do have more choice. Getting your house priced at market, if you're the listing agent, is paramount. 5-7% over what the realistic market is can cause a home to just be setting. Being very purposeful has never been more important, ladies and gentlemen. Next, please. As we dive into some numbers here, what I'd like you to pay attention to is that we're just under 9,600 or just under 10,000. We're at 9,635 active listings. As you come across the bottom right-hand corner of the graph and you're looking at the red lines, you're seeing here that home prices have just been pretty level the last 4 months. And our average list to sold price is running just under 100%, between 98 and 100%. That's been pretty consistent the last 3 months. Next, please. What has changed ever so slightly in the blue line, if you track that, is our absorption rate, or a month of supply, I'm sorry, which has gone up over 2 months. We're at 2.33 months of supply. Our absorption rate is 42.9, almost 43%. Ladies and gentlemen, in any other time, this is a wild, crazy, aggressive market. But because of what we've experienced the last 18 to 24 months with such low inventory, we became a little bit conditioned to that. And having 2.3 months of supply may seem like a lot of choice. An absorption rate that's not over 100% seems almost slow. We have an aggressive market. Technically, we have low demand and low inventory, which makes it feel like a pretty busy market and or a seller's market. Next, please. As we drill into all of Maricopa County and Pinal County combined, we're showing that our prices are down in the yellow circle 2.1% from this time a year ago, with an average of 256.29 for all of Maricopa County and Pinal counties combined. And we tipped over 2.3% months of supply. Next, Sarah, what I wanted to share here is on the left's graph is only Maricopa County. On the right graph is only Pinal County. And what I wanted to point out is we're at 0.9 months of supply down in the yellow graph from where we were a year ago. Our active listings are 39%, but our prices are down just right at 1%. Note the difference continuing in the yellow, that our median price in Pinal County is just $200.34 a square foot, where Maricopa County is $267.55 on average. When you look at that, ladies and gentlemen, there's just a discrepancy in terms of total dollars for the home prices. Next, Sarah. To look at the harder numbers, and what I'd like to point out here, ladies and gentlemen, is in the green arrow, under contract, 6,038 homes under contract. We sold 4,907. Both of those numbers are down. What is changed is go back to the under contract at 6,038 and go down to line number 2, new listings, 7,218. That's up just about 2% from where it was this time last month. It's up 5%, almost 6% from where it was 3 months ago. But we are selling just under 1,200 doors less than what new listings are coming on. So there's a very good churn that's happening. Also, in the circle graph in the center, please note new builds are making up 14% of our monthly transactions. And you're going to see a lot of that in the far Southeast Valley and the far West Valley in terms of new construction, new home build. And that market is alive and well. Next, please. When we, I'm sorry, that slide is a repeat. Apologize. What we want to show here, I wanted to do something a little bit different because we're looking at the total number of sold homes, and it's just under 5,000. But this here, graph number one, is canceled listings at 1,064, the far right-hand side of the blue line, 1,064 effective October 1st. And there's really been no significant change in canceled real estate residential listings for the last 5-7 months. It's been pretty consistent. Ladies and gentlemen, let's hold that number of 1,064 and we'll go to the next slide, Sarah. And this is expired listings, and our expired listings actually dipped down, but it's been consistent for like the last 6-8 months at 349. So let's just say this is 1,400 doors combined. Next slide, Sarah. Is temporarily off market, and it too is holding fairly close at 1,135. So when you add all three of those numbers together, you're looking just about 3,000 doors. And stay with my math here, ladies and gentlemen, as we go to the next slide. 3,000 doors, remember that. Sarah, next. Okay, so our active listings is actually tracked up to 9,635. Again, this is from Maricopa County. Next slide. Under contract has been drifting downward. And this is what I want to point out to you, ladies and gentlemen. Under contract has gone from 58 to 56. We're down at 5,026 as of the first of the month. Well, we had 3,000 doors go out of our market. And when you look at that, that's about 70% of our under contract homes. And then you add together the temporarily expired and canceled listings being 3,000. There are people like, hey, I'm out. I for whatever reason, I'm taking my house off the market for whatever reason. The people that have an active listing are new, fresh, and purposeful. So just because it's been a certain way the last 3 or 4 months, the people in the market today, ladies and gentlemen, are purposeful. Otherwise, they're canceling, expiring, or temporarily taking their home off the market. Next, Sarah. Closed listings, we dipped again. We're not at an all-time low, but boy, it's sure getting close to that. 4,141 closed listings for the month of September. Next. Okay, new listings, a little bit brighter news. Again, 7,383 on the far right-hand side of the graph. And that's been pretty consistent overall the last 5 or 6 months. Again, these are very purposeful people out there in the market. Next. Transitioning, now we're back into the individual cities for the balance of the report. And so I'm just going to point out a couple things here. The blue circle, active listings are down 9.6% for the town of Apache Junction. In the yellow graph, prices are up 3.3% from where they were this time a year ago. So Apache Junction, part of that is the airport, Mesa Gateway is alive and well, and that the housing there at an average of $237 a square foot. The homes are just a little bit more affordable. There's a lot of new construction happening out there. Very purposeful place to live and create a life. Next, please. To back that up here with Apache Junction, active listings at 161, under contract at 107. And new listings, line 2 in blue, 108. Ladies and gentlemen, that's a real balanced market. Actually, it's a pretty high absorption rate comparatively. And in this particular report, they're showing that fix and flip is just under 10%, the blue portion of the circle diagram. And in terms of new build in Apache Junction, just 3.3%. But their fix and flip model is still working there. Next, Sarah. Avondale, wanted to point out here as well. Their active listings are down 43%. Their home prices are down 7.4 in the yellow circle, 7.4 from where it was this time a year ago. Next slide, Sarah. And when we look here, what I want to point out again is under contract at 80 and new listings only 75. They have a higher percent of new builds in compared to Apache Junction at 18%, and their fix and flip market currently is at about 10%. And that is the purpose or the market of the moment in Avondale. Now we're going to go through the rest of these, Sarah, just a little bit quicker. Here's Buckeye. Hold that slide right there. Wanted to point out here, new builds in Buckeye make up 37% of the total number of homes. That is a far bigger cry than most parts of our community. That is alive and well. Douglas Ranch has a lot of energy. I know the Hughes Corporation just released 37,000 doors on the far west side as a phase to launch. There's huge energy happening here. Next slide, Sarah. Carefree, next slide. And keep going there, Sarah. I'm going to have you slow down when we get to Paradise Valley. Ladies and gentlemen, the purpose of this is you're targeting a very specific area and you want to research this on your own by city. That's what this is designed to do. What's happening as local as we get for you with ease. But as Sarah is transitioning through here, when we land at Paradise Valley, just want to spend a bonus moment there because of the market of the moment. Here we go. Back up one slide, Sarah. Go back. There we go. So our active listings are down just 6% in Paradise Valley in the blue, but the median home price is up not 1%, not 5%, but 41% average sale price per square foot in Paradise Valley. It's gone from $556 a year ago to an average of $800 a square foot. There seems to be records happening in terms of cost per square foot happening left and right. And this, ladies and gentlemen, is a lot of cash buyers and a very purposeful market. So just because the average of Maricopa County is down 1%, please know that the individual cities are adjusting up and down. And this extreme example is Paradise Valley being one of the most affluent zip codes in the metro. It's up just 41%. That's noteworthy for everybody to know and understand. Sarah, as we bounce through the rest of the slides today, just want to thank everybody for viewing and listening. I hope this information is helpful. If there's something out there you want to see different in the future, get with your Landmark title representative. If you have a chance to send them some business, they do a great job. Always helpful, consistent, and it's a pleasure to provide these numbers for everybody out there. And I wish everybody a very purposeful day. Thanks, Sarah.
Thank you for watching. Come join us every month on Marketing Insights and let us help you stay on top of the real estate market.